The dollar versus Canada, like other currency pairs, have seen the US dollar move to the downside and then rebound back to the upside. In trading here today, the price action has moved from above the 100 and 200 hour moving average to below and is now back above it. I'll go through this ups and downs in this currency pair in this video. So let's get started. If we take a look at the trading range from last week, the total trading range was about 84 pips. That's not a lot. We did have lower trading ranges in 2024, but at 84 pips, it's indicative of more of an up and down, non-trending type of range. And you can see that pattern continued today with the price initially moving lower in the Asian Pacific session, with the low price coming down to these levels right through here. In the European session, we bottom, moved back higher. In between that move to the downside, back to the upside, we did see the price extend below and then above these two moving averages. The blue line represents the 100-hour moving average at one nice round number of 1.4200. The green line represents the 200-hour moving average at 1.4210. And as you can see, the price started the day above that moving averages, and then fell below it right through here, increasing the bearish bias. But then when we moved back above it and started base against this level and moved above the 200-hour moving average. And now the bias is a little bit more to the upside here. That's a tilt from a technical perspective. Now, admittedly, the price is traded above and below those moving averages, both on Friday and again today. So the market's kind of having a difficult time of figuring out which way it wants to go. Do we want to see a higher dollar, lower Canadian dollar, in which case we see this pair move to the upside? Do we want to see a lower US dollar, higher Canadian dollar moving back to the downside? That's a decision that traders will have to make, and we'll see it in the price action. If we're able to hold above these levels right now, keep the bullish bias, then we can expect that over time that the price is going to start to take a look at other levels, including the high price from Friday's trade, the high price from midweek last week, or the high prices from there between 142.36 and 142.45. You just try to build the case for further upside momentum. Then we'll look toward this swing area down through here, followed by this swing area through here. It's way up here is a 38.2% retracement of this move to the downside. But Rome was not built in a day. You have to just start taking your little baby steps along the way. If you're going to increase the bullish bias, you got to move away from these moving averages. The first thing, and so far we haven't necessarily seen that. We've seen some price action to the upside, but we need more momentum in that direction. We need to start to take out some of the other targets on the top side. If we do fail again, then the bias is going to shift back to the downside, and we'll look for other targets on the downside to start to be looked at, including the low price from here, and then the low price from the week prior at 140.150. You see this blue line right down here. That represents the 100-day moving average, and that's ultimately going to be a key target on the downside. I'll go to the daily chart. That's this level right here. We haven't been below the 100-day moving average since going back to October 8th of 2024, maybe October 9th. But a while ago, the price has been below the 100-day moving average. So getting below that level would give the sellers more confidence or more control. And then we'd look toward the 50% retracement of the move up from the September low to the high price that we saw off of that tariff news at the beginning of this month that was then rescinded. So that's a technical look at the dollar versus Canada Kickstart Trading Week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.